Good evening. Having some technical issues here. I should be getting started in a second. All right. Good evening, everyone. I apologize for being late. Technology failed me today, and I had to literally restart my computer a couple minutes ago just to make sure that everything was working. Welcome to the call. I appreciate you all your time today. This will be our last um, webinar for 2018. I probably will start these back up again somewhere around um, mid-January, just so that everyone can kind of get back into the swing of the new year after the holidays and be able to kind of get themselves squared away. I know many people have New Year's resolutions, so do I. And for me personally, my main goal for my business owners is to help them work in excellence for 2019. I want to see you all win. I want to be able to help you all truly build business credit and be able to get business financing without using your social security number. And so if you all have any questions in the midst of this presentation, feel free to chime in. And so, those who have been on the call, you may know me already, but you may have met me through this company, which is Real Solutions for Real People. You may have met me at different events because I am a business consultant, and my financial service division is First Class Funding, which is direct funding for business owners. And then Fundio is my business credit builder program that teaches you from start to finish not only how to properly form your business, but properly form it to be able to apply and get approved for business credit strictly in your EIN's name. So if you have any questions, feel free to chime in or send them after this call. But definitely, you'll get some good information for this evening. So tonight, we're going to talk about the different types of business financing. I come across a lot of business owners who are seeking financing, but I'm not sure if they understand what's needed in order to be approved. And so I'll share my story briefly. When I first started my first company back in, I guess like 99, 2000, I used to do gift baskets. I used to make customized gift baskets specifically for business owners who are looking to schmooze their clients. So people will come to me, tell me the type of client that they're looking to work with, and I will make a gift basket based off of that particular client's needs, or that maybe a little bit of information may have been given to me about the client's likes and dislikes. And so I would make customized gift baskets based off of that. So having that first business, I never even knew anything about business credit. I was using my money that the customers were paying from to me to purchase the items that went to the gift basket. And overall, what I found was that it had to be a better way. And so over the years, I again, not knowing very much about business financing, not knowing very much about business credit, did not know there was another way to be able to pay for the items that I needed for my business without having to come out of my pocket right away. And so, with that being said, is when I began to study what business financing was, what it was to have true business credit. Contrary to popular belief, a lot of us as business owners, we thought that, you know, leveraging our personal credit to get business credit was a way to get true business financing or business credit. We thought that having to get business credit would require us to have to run our personal credit. And so a lot of those things that's being taught out in the marketplace is inaccurate. And so tonight, while that's not fully about business financing directly, what I will make sure you all have is access to our YouTube channel as well as our Anchor podcast. So you can go back and listen to previous calls and understand some of the breakdown of what business credit truly is, how it works, different levels of it, and more importantly, how to get started building it. And so, again, this evening, we're going to talk about the different kinds of business financing. But to end my story, what I learned was I was doing business credit the wrong way. Prior to me learning about true business credit, I actually used to use my social security number on all my business credit applications. And so when I thought there was the right way to be doing it, I was highly misinformed. And unfortunately, as I was using all my personal credit up, ruining it as I was getting inquiries, as well as having to use those credit cards for business, because with business credit, the more that you use on your credit limit, it doesn't impact you. But when you're doing it personally, it does impact you. I again thought that it was a better way. And so that's when I started studying what true business credit was. I now have mastered it. I have an 80 paydex score. I have a very high score on both Equifax and Experian. And now I'm living in the true business credit world. So none of my accounts that I have with my business credit have anything to do with my personal credit profile. Everything is in my EIN name. So I just wanted to share that story because I think sometimes when we're misinformed, we almost feel like getting business credit or the process of applying for business credit is complex. It's hard to do, and more than anything, I think we don't believe it's actually available to us. And so I wanted to give you all some ray of hope in knowing that there is a way to do it. I've actually anything that I even share with people, I've practiced it on myself. I always guinea pig myself first so that I know what all the hiccups and barriers are. So when I'm sharing this information with people, I know exactly what they're experiencing and most likely can help them. And so the reason why I'm doing this call tonight is because for you all to move to the true business credit world, understanding the different types of business financing is important, because as a business owner, if you don't know what options are available to you, you will eventually feel like you have no options. And so that's never my intent, having experienced taking one for the team, so to speak, to not share with you everything that's available to you. And so what's good is that I do know the different kinds of alternative financing. And by doing that, I kind of helped you out. So I would say that taking one for the team has shortened your time length that it will take for you to be able to get business credit that's truly in your business name. So let's get started. So credit lines are one type of business financing that many of us already are familiar with. So most people have access to it. Most people know about it because that's what you see advertised, all over the internet. Commonly, when you speak to other business owners, that's commonly what you kind of see. The reason why credit lines are available is designed to allow for you to have flexible spending. And so, for instance, you may have, let's say, a $10,000 line. Having that 10,000 line, you can run it all the way up and then pay it all the way back down and have that flexibility and not have to even worry about whether or not it's available to you to use. As long as you're paying it back on time and long as you're, using it responsibly, usually that particular line will never close off to you. And so while most people on a personal side is really hard to get, a loan, or really hard to get a personal line of credit, it just depends on who you bank with, but it is really hard on the personal side to get that. And I think one of the bigger challenges are, as business owners, our scores aren't that high. So unfortunately, that's another issue. So just so that you understand the credit line a little bit more, um, most of the times they're looking to see the financials of the business. So I meet a lot of people who say, well, Jessica, I'm looking for $250,000. And my first question to them is, one, do you have a business plan? Two, do you have your business registered? And three, how's your credit? And the reason I ask those questions for, one, if you need that kind of money, I would presume if you had a business plan, or if you should have a business plan, and it will direct you on exactly how to spend the 250,000. And while you don't always need a business plan, I feel when you are a startup company, or if you're a company that's trying to grow, it's important to have some kind of direction when it comes to building your business, because it's going to be really hard for you to get $250,000 and spend it wisely, without having a little bit of insight on how it's going to be used. So, rather you're getting for, you're purchasing equipment or hiring new employees or anything in between, it's very important to understand that if you had that money, how you want to use it. Secondly, I always ask about a person's business register, because I meet a lot of people who said they're in business, but their business is not registered. And what you don't know, but on the business side, someone, if you say your company is XYZ, they don't need permission to run an inquiry on your business credit. So if you tell me your company's name is XYZ, you want to do business with me, all I have to do is go to one of the three business credit bureaus and pull your business report. And I'll know right away if your business is even registered. I'll know how much money you all are making. I'll know how many employees you have, where your company is registered at, who the principal owner of the company is, and everything in between. And so while it's great that a person may need, for instance, in our example, $250,000, if your business isn't registered, no lending institution would give that to you. And lastly, I ask about the credit because oftentimes, and I don't mean to offend people when I have this conversation, but if your personal credit is not right, it's going to be really hard for a business lending institution to give you high dollar amounts without knowing how your personal account is. They want to know, were you responsible with your personal credit? So I would say that the business credit building way is the easy way out. But when you're starting to get larger and larger amounts of money, they want to know how much money you make and how's your credit. And so while they're not always going to run your credit, they may even have you bring a credit report to the closing table, or before you even get that far in the process, just to kind of see how your credit's going to be. But either way, you have to be mindful that they're going to judge you based off of your personal credit and your personal spending habits and how you use your personal lines of credit and credit cards. So it sounds good to want $250,000, but without a business plan and without showing that you're responsible with money, it's really hard to get approved. And so I always look for solutions. So my solution to that is, for anyone who is listening to this, is to make sure personally your credit profile is near perfect. So near perfect would be, if nothing else, not having ran up all your credit lines and credit cards. So that's your ratio. Okay, so that means if you have $1,000 card, all your balances for those cards have to be under $300 or 30%. Anything above 30%, lending institutions see you as being risky. And then the other side to it is the business plan, of course, will help direct your path. So if you kind of know you needed $250,000, I'm pretty sure most people have not pulled that number out of the air. Usually they may have done some market research to see, they needed X, Y, Z amount of money for marketing, or XYZ amount of money to develop software or anything in between based on their business. And quite naturally, in order for someone to give you $250,000, they're definitely going to be looking for you to make a lot of money already. And so that's the other challenge that a lot of my business owners have, is that normally they don't have the income, and no one's going to give you more money if you don't have any money. And so what I always encourage people to do is, if you're starting your business for the first time, start your business. Money should not make you or break you in your ability to be able to do what you need to do for business. And so what that means is, let's say you have a lawn care business. You can start your business by maybe renting equipment. So instead of you outright buying, Home Depot rents by the hour. So maybe you need to rent a lawnmower or a leaf blower or hedge trimmers, whatever you think you may need to get the job done temporarily until you're able to purchase these things. So nothing should stop you from doing the business itself, unless say you don't have any money. I see young kids out there, and I'm from up north, but I see young kids out there shoveling snow. All they have is a shovel that they may borrow from somebody. So if you're really trying to be in business, money is not going to determine whether or not you're capable and willing to do your business. That money will enhance your capabilities and willingness because you can do more, because you have more, but it should not be the reason why you're starting a business. If anything, you should be able to prove to investors, to lending institutions, and just to your customer that you're willing to go the mile to make your business work. So I challenge you all who are listening that if you're starting a business, don't say you need money first. Mind your business, meaning make sure you're doing your business first, and then money will come. Because as you're starting to make money, you'll see in this presentation, there's other ways for you to get financing other than lines of credit. And so this here is just reiterating what I said. If you are in business, they may ask for, only thing I did not mention is a profit and loss statement, but everything else, business plan, bank statements, those are normal because that's what they consider are your financials, and that's how they verify how much money you make. And so this here just tells you a little bit in more detail about what I just pretty much mentioned. So of course, some may be watching this video versus listening. So I'll just go over these points. So credit line says your approval amount will be based on the profits that you show in your tax return. So that's why you need tax returns. That's why they ask for bank statements. They need to verify your money. There used to be a lot of loans back in the day, what they call our stated income, but that's not very often that you see that happen unless that's, a real estate deal. You could tell them that you plan on making XYZ off of the property after you fix it up. But stated income is not as common as it used to be. I'm not saying it does not exist, but you can't just say, oh, I make XYZ and don't have any proof. They're normally going to want tax returns or bank statements. With credit lines, as I stated before, they're going to look at your personal and your business credit. They both should be good in order for you to get approved. The lenders like to see that you have open credit lines now with high limits. So you wanting $250,000 and the highest limit you have is $10,000, that's a big disparity. And so they will want to see that you have worked your way up to that $250,000 versus straight out the gate them giving you $250,000. The only time that normally happens is stuff like how you see on Shark Tank, if you're on like a crowdfunding site or some other kind of angel investor or venture capitalist site where people are just giving you money just based off the excitement of your idea or the viability or your vision. And so that's kind of nothing to do with a credit line. That's just investment money. So that's, another option. If you have a really great idea, crowdfunding may help you as well. But last point, approval amounts might also be linked to your existing limits now. So they're not going to give you way more than you have already had in the past. So that's why it's important to make sure that your personal credit is good, because that will allow for you to be able to work your way up to those higher business credit. But one thing I will say is when you have pretty good personal credit, when your scores are high, they're willing to give you higher amounts right out the door. It just may not be the amount that you're looking for right away. And so what you do is you work hard at that particular amount. So let's say it's 50,000 instead of 250,000. Pay it off, pay it on time, use it properly, and then that same line can grow as you're showing a good business relationship with that bank. So don't give up. If they don't give you all the that you need, just know that you can easily work your way through and up that ladder if you are being responsible with the money. So not all will be lost. So with loans, there's lots of loans out there. So let's start with that. So some of the common loans that you hear are available out there are SBA loans. An SBA loan is through the Small Business Administration. And by it being through the Small Business Administration, this is one of those kind of loans that you cannot skip on qualifying. So what that means is you cannot say that you make a certain amount but don't have proof of it. And not only can you not just say that you have a certain amount, they want to see that you have cash flow. So cash flow is your money that you have on hand at the end of each month after you paid all your bills. So let's say you're making 20,000 a month, you may have 15,000 in bills. They want to see that you have money left over at the end of the month and that you're not just paying out as much as you're making. And so SBA loan, that's just one qualification. There's lots of qualifications for SBA loan that I'm not going to get all into today. But typically when you're trying to get an SBA loan, you will go through a conventional bank, meaning, whatever your local bank may be, most likely they may offer SBA loans. It's quite highly unlikely that most banks, unless it's just a really small town that you live in, but sometimes even with the SBA loan, they sometimes may ask for collateral, or collateral being equipment. It could be real estate. It could be an example, as this particular slide says, a book of business. So if you're in insurance, it could be purchase orders. It could be accounts receivable. It could be any of that. And so with that being said, typically loans require a lot more for you to qualify for. And so in previous presentations, that's specifically what we talked about, is exactly what is needed to qualify. We're not going to really go into that tonight in more detail, but when those slides do come up, just take notes in case you don't have the time to go back to watch previous videos and previous podcasts. You'll get some more information about what in particular you need to qualify. And so when you are going to get a loan, it's they have some loans. So typically, let's go back for a second. You have real estate loans, and then you have strictly business loans. So a strictly business loan, sometimes they're typically short term. They're usually 20 years or less. When you're doing real estate loans are typically less than 2 years. And so a lot of times when we're looking to get loans, we have to be mindful of how much time we have to pay it back. And what I always encourage people to do is, if you want to get a loan, just use the money to either flip the money. So whatever you want to use the money for, make sure it's giving you a really high rate of return, or use it in something like real estate, so that you can get equity out of a property that you may purchase at a later date and time. Always make your money work for you. So point that I'm trying to make here with the loans is they're not forever loans. So some of them have really high interest rates. Some of them have really low interest rates. Some of them you may be lucky and get 0% interest for a period of time. And so the higher your scores are, business and personal, the better off you'll be when it comes to trying to basically make that happen for yourself. And so what is really great about all of this is for a person to be able to get one of these loans, that means that your business is at the highest level, where that means that you are doing everything right, you're making a certain amount of money, and more importantly, when you're at the table, they trust you and they see that you're credible, and that by doing that, they'll make sure that they'll be able to, of course, pay it back. So those are the most important parts of getting these loans, okay? So be mindful when you're getting a loan that they're short term, percentages vary, and more importantly, you have to be sure that when you're actually doing this process that you just look your best, so that you'll be able to do what you have to do once you get that money, and most importantly, pay them back and use it properly. Advances. So merchant cash advances are typically what you may see especially if you use PayPal, or even some of these other um, websites where it says, based off of your money that you have coming in with credit card sales, that they will lend you money based on an average of how much you're bringing in sales. But what's really cool about that is that you get the money like super quick. I mean, you get the money within like a couple of days. So if you have pretty high credit card sales, so if you have an e-commerce store or some other way that you have high ticket items that your customers pay you for, and you're using PayPal, or you have a merchant processing company, um, they're going to literally just look at your bank statements and see that you have a certain amount coming in. And so the repayments on these are easier because they already know how much money you make. Like, they see it on the statements, they see how often you're getting paid by your customers. And so these are way easier to qualify for than a traditional loan or other kinds of financing out there, because the requirements aren't nothing really other than the fact that you're accepting credit cards. And so for you who are listening, if you are currently accepting credit cards, if you have an e-commerce store, if you have a PayPal account, PayPal offers this. And so some people don't have business bank accounts. So while we're on that particular topic, I would encourage you all, if you have a PayPal account, Stripe account, Square account, or anything that you may use for credit card processing other than a true merchant account, I would suggest that you still get a business bank account, because one of the qualifications for a lot of these companies is that you have been in business for a few years sometimes. And so the only way they know that you've been in business, because a lot of people have businesses, but they've never had a business bank account. And just so that you know, when you have a business bank account and you open your business bank account for the first time, that's what's determined by the lending institutions, how long you've been in business. So technically, you're not in business until you get a business bank account. And so I know a lot of times, unfortunately, people commingle funds. So they may get paid by a customer in their business and they put the money in their personal account. But what I am telling you is do not do that. And the reason being is, again, you're not in business until you have a business bank account. And when you go apply for a business bank account, all they're going to ask you for is your EIN letter and your business articles of incorporation. Hence is why I said earlier, so many people are in business and do not have their business registered. You must have your business registered with the Secretary of State, not a business license from your county. And it really boggles me that a lot of these counties allow for people to get business licenses without even having their business registered with the state. That's skipping a couple steps. Secretary of State is who's going to, keep you looking credible, not your county level business license. You can get your business license after you get your Secretary of State, but in place of your Secretary of State, that is not the proper way to do that. And a lot of people are misinformed about that. They have these business licenses and you're saying you're in business, and that's great. But when you start to deal with companies and getting government contracts and, you know, in doing big business, the first thing they're going to look at is your Dun and Bradstreet, and they're going to look at your Secretary of State filing. So be careful with that, guys, because a lot of people are misinforming the public about that. And so this is very true here. I skipped the last slide because I had already explained that, but this slide here is just basically saying that um, while the terms aren't the best, typically when you're doing a advance, what they're doing is they want to take a percentage of your payback out of your future sales. So they already kind of see the patterns that you have with your credit card sales, and based off of that is how they're going to create your terms. And while it's not always fun to do it that way, because they literally are going into your account, and a lot of people don't like people just going into their account, but if you want to have a business relationship with these people and have an ongoing account with them, it's best to just do it this way. Some people don't like it because it goes directly into their account. I know this here. Um, Typically with most loans, it could take regular loans could take a while for you to be able to get them, but advances come back less than 7 days, typically in 72 hours. So this is a great quick solution for you to be able to get financing, so that you can access capital quickly and efficiently, because the people know exactly how your terms going to be. So by the time they see your bank statement, they use algorithms and tell you exactly how much you have to pay and for how long based on your current credit card processing. So it's a good thing. I like it. Credit cards, I'm not going to read what's on here, but credit cards are just like your personal credit cards. But the only thing about credit cards on the business side, just to give you a clearer picture, let's say you have a Capital One card on your personal side for about $10,000. On the business side, if you got good business credit, typically you can get 3 to 5 times more. So for that same $10,000 card, you would probably get $30,000 or $50,000. And what's good about that, and what I always encourage people to do, is I know sometimes folks want to have certain kinds of funding, but credit cards are just as good as anything else because you can access the full amount and don't get penalized. On the personal side, that same $10,000 card, if you try to take all $10,000 off, they are going to kill you with a bad score. You want to lose all kinds of points just because you maxed out that card. On the business side, let's say you wanted to take the whole 3 to 5 times more, which is 30 or 50,000. You can max that card out, and it's not going to affect your score. The key is to pay it back, and as long as you pay it back, you're good to go. On the business side, what's good about once you get to that level, as we know, there's different levels to having business credit cards. Once your score is high, which is an 80 payback score or higher, you'll be good to go. It's not hard to get an 80 score. And with these credit cards, this will give you the opportunity to not have to run your personal credit, which we talked about earlier. It's called leveraging your personal credit, but it also is called personal guarantee. So with these cards, if your business score is high enough because you've built other kinds of ways on financing with your business, it's pretty easy for you to get one of these cards. And so that's just one kind of card. So the other kind of card is your unsecured business credit card. So your unsecured cards are typically similar to what you would get on the personal side again. But what's great about that, so you have your store cards on the business side, and then you have your unsecured cards on the business side. Your unsecured cards are what's good that will allow for you to be able to, of course, we said the access to high limits, and then also a lot of times you get 6 to 18 months of 0% interest. So what's good about that is you can do balance transfers, right? And don't have to pay any extra. And more importantly, you have almost up to a year and a half to pay it back without having any interest on it. So business credit cards, typically a lot of them have 0%, whereas other cards, not so much. And when you're on the personal side, you are lucky to be able to get something that does not have that does have 0% interest. Usually that just doesn't happen. Excuse me. And so that's what's pretty exciting about this business credit world, because you'll be able to get way more than you normally would if you were on your personal side. Excuse the noise in the background. I had to let the dog out. And so here just gives you a little bit more meat about the unsecured cards with a personal guarantee. So the only reason why on a business side you would have to personally guarantee is if you have really high limits. I know people with $250,000 limits. Mine's is under that amount, but I know people who have unlimited black cards and platinum and all those really nice cards that you see on YouTube and all the other videos. And so those do require personal guarantee, because typically that's what American Express and American Express cards, that's normal. So be mindful, everybody wants American Express card, but they always are on a personal guarantee. It's not going to be very often where you'll be able to get a personal American Express card without having to personal guarantee. So I'm just throwing that out there. And for that reason, I guess I'll go back to the point of the personal credit side, is if your personal credit is good, then you can use both that and your business credit to take your business to the next level. And so I don't encourage anybody to even start the business credit process without making sure your personal credit is good, because there's always going to come a time where you're going to need your personal credit for something. So why not double your credit potential by using your personal and business credit? So just think about that. I know, again, a lot of times people aren't that privileged to have the best credit, but fixing your personal credit is not hard to do. And if y'all want an ebook, I sell it for pretty cheap. It's under $100, and y'all can easily find everything you need about all the laws and how you can, fix your credit pretty easily. All right, so we're going to now get into some of the things that you need to be able to apply. So I'm not going to read off of these actual these slides, but I'm going to explain it to you because I've explained it in previous presentations so that you can fully understand why these things are important. So everything I'm going to explain now is what helps you build credibility. So to start, your company name is important, because based on your company's name, they'll know for sure whether or not you are a one-person show, a multi-person show, or a big conglomerate. They can look right at your name and tell whether or not what kind of services you offer or products you offer, because everybody just, we love what we do. We love being entrepreneurs, and we have a tendency to say, hey, I'm Jessica Lewis Enterprises, or I'm Fix Your Credit, blah, blah, blah. And what you don't realize is that half the things that people are into, unfortunately, are restricted. And so by it being restricted, you won't get funding just based off of that. So you never want to put a big red X marks the spot on yourself just by being a little cocky about your name. And so what I suggest with company names is you don't use anything like that. Something simple. If you want to have your name, use your initials versus your full name. If you want to have, your service offering in the name, just be mindful on how you're naming it. You can get more details about that on YouTube or even our platform for Fundio that goes in more detail about how to choose a name. And so here's a great suggestion. Everybody just become a consultant. You know, when I first started my first business and I was trying to build business credit, the way it was explained to me, you don't ever tell them what you really do. You just tell them you're a consultant. And if they ask what kind of consultant, say business management. Because what will happen is they'll shy away from asking you a bunch of questions, that's more in detail about what your products and services are. And then what's even better, everybody knows what consulting is, so you don't have to explain yourself. And sometimes you can explain yourself right out of your money. And so that's why you just choose a real simple name, because people aren't going to ask you a bunch of questions. Credit repair, financial services, other kind of financial services, real estate. There's a lot of um, industries that gambling, tobacco. There's so many industries that people just aren't willing to lend to. So be careful with that. It sounds good, to want to show everybody what you do, but there's a lot of entities that's not going to lend to you just based off of your industry alone. The next thing is going to be your phone number, and so um, they do know if it's a business number. Okay, and they know for a fact if it's a home number, like your house, or a cell phone. It's as simple as them putting your number in, doing a reverse lookup, and unfortunately, Google tells all your business. Google will say this is a T-Mobile line, this is a Verizon line, this is a cell phone. It tells all your business. And so the reason why the phone number is important, again, you want to look like you're a big business. And so just make sure you can, however, get around that by doing what it says here, which is a voice over IP. That's something like eVoice, Grasshopper. There's a lot of other companies out there. I would not suggest a Google Voice number because everybody knows Google Voice is typically used with association to cell phones. So I don't suggest you use that. Okay. But your phone number is important because you want to look like you're in big business. They ain't got to know, it's just you working. All they need to know is that you had an 800 number, okay? Make sure it's an 800 number. Don't even do local, because even if you wanted to do business internationally, they're going to look at that as well. Then it also sometimes it make a difference if you are an actual homeowner, not necessarily. But what could happen is they could be looking at whether or not you as a business, a homeowner reflects that you're responsible, right? Because typically most homeowners, you may have had to pay a pretty hefty mortgage for a period of time. You could be a new homeowner, but taking responsibility as an adult sometimes kind of helps. As you see, most it's not that you're less responsible if you don't own a home, but to them, it just shows that you're mature enough to handle that kind of responsibility. And so with that, it helps you be deemed as a more creditable person. So why not? It's good that and stuff like that is on your credit anyway. So they'll know right away if you own a home, especially with credit. What's important about credit that a lot of people don't know, not to go real deep into it, but your mix of credit makes a really big difference. And so, again, this also breaks down too that you can always sometimes use your house as collateral for financing for business loans, for specifically the SBA. Do not do that. You cannot want to be in business that bad that you would be willing to put your house up that you have to live in, regardless if your business does well or not, just to be in business. I don't suggest that. I don't think that's very wise, and quite naturally, doing that puts you and your family at risk for being homeless if the business doesn't work out. I do understand we all, Tiger, sir, why you wait till I get on the phone and want to eat? This dog is crazy. And so quite naturally, I would not do that. I just don't think that's very wise. I don't think that's the best use of leveraging real estate. Leveraging real estate, you should be buying other real estate, not to get a simple loan that, you know, the stringent things that you have to go through with that is not even worth it. If you want to use equity out of the home that you live in, go buy a rental property so that that rental property can pay for your house that you live in. I would not suggest doing it any other way, okay? And so this here is specifically talking about assets. Excuse me for a second. And so lenders love assets because they love collateral. So be mindful, because a lot of times when you are looking to get loans, they will ask you, do you have property? Okay. Um, but I still do not suggest you leverage any of that. Okay. Yes, it will improve your odds of getting financing, but I will only do that as if it's necessary to get something like real estate, not for just getting a loan for your business. And so there's other kinds of asset lending. So you have 401k and stocks, you have real estate, you have inventory and equipment, you have purchase orders and receivables, things we talked about earlier. Because asset-based lending is something very commonly used for you to get to the money quicker. So earlier we talked about advanced loans, but this will do the same thing. So back to things that are important outside of the assets. um, Time in business makes a really big difference. You're considered riskier if you're in business for 3 years or less, because oftentimes statistics say that most businesses fail in the first 3 years. And so doesn't mean that's going to be your situation, and we're not even going to speak that into existence, but you are considered riskier. And so sometimes that's why it's important to understand what the underwriting guidelines are before you begin applying to something, because oftentimes you could immediately be disqualified just because you haven't been in business long enough. So be mindful of that. So I'll just read through this really quickly. It says being open less than 1 year makes it tough to get financing. You can get unsecured personal business credit with no issues at all if you've been in business less than 1 year, because those particular cards are actually running your personal credit. Advances are tougher because typically you haven't really kind of gained the momentum of how much money you're going to be making. So with an advance, it's hard to get because they can't really determine whether or not your income is going to be consistent because you've only been around a year. um, and loans even more, because loans is usually based on the history of a company, and being in business for less than a year unfortunately doesn't allow for you to be able to um, access, they can't access the true potential for your business if you've been around for less than a year. But keep in mind that there are some vending opportunities, store cards, and some even cash cards that are available that will approve you for 1 year or less. So don't lose hope. Another thing that they look at is your average revenue. And so stable income for your business is very important. Um, I mean, probably the most important thing, because let's say you didn't even need a loan, you have to know whether or not your business is going to sustain time. A lot of our businesses may have a lot of strengths, but those weaknesses that we try not to focus on as much could be what's going to be detrimental to the health of the business and the success of the business. So be mindful of that. We talked about high risk industries. We talked about blacklisting. So each lender knows what they're willing to lend for and what they're not willing to lend for. So just be mindful of that, because oftentimes if you're in one of those industries, you'll automatically get blacklisted. So it's important to understand those underwriting guidelines so that you don't have to worry about that. They, of course, are talking about personal credit scores. Having a high credit score sometimes is needed, other times it is not. Business credit scores are equally as important, because what they're looking at is your success rate within your business. So they want to know how well you're doing in it, how many accounts you have reporting, how you're using this. If you're not established, that's typically what we call a startup business. They're looking at that as well. So there's a lot of things that could be held against you when you're trying to find financing. So we already know there's three different kinds of credit: is personal, business, and bank credit. Um, these three here, as long as you have the ability to pay back and your scores are pretty decent, you can get access to it. And so this is pretty cool right here. And this is something you don't see that happens pretty often. So here it explains that your bank rating is mostly based on the amount of money you keep in your bank account. And so that's kind of what I talked about, not even just for your bank account, um, for personal, but the same thing for business. So we spoke very briefly earlier in this presentation about how when you have a bank account, the money coming in and the money going out should not leave you at a zero balance every month. So if you have some money left over, it just helps you look better to your bank. And so when you're coming in and you want some money, they're happy to give it to you because you always have a pretty decent amount left over. They know that you're not going bankrupt, so to speak, every single month. And so, to get into how long it typically takes to get funding, some products take up to 90 days, sometimes even longer. But more importantly, many of them take less than 30 days and sometimes even less than 3 weeks. And furthermore, less than 7. So, what's great is that you have lots of options to be able to make sure that you qualify before you actually start applying. They all do due diligence. They all want to check and make sure everything that's financially related to you is in good standing. They always look at your online reputation. And a lot of times, what you don't know is a lot of our business credit scores actually educate you on specifically whether or not your business is likely to go out of existence in a period of time based on how much money you're making, based on the history of that company. And so be mindful of that, because they will always have access to every single thing that you have. So as much as you would like to, act like that account that you didn't pay will go away, that's not how that works. It's going to be there. They can see it, and they don't have to get your permission to run your credit to see it there. Another thing that they're commonly looking at is when they're doing that underwriting process. It may take them a couple days to get back to you, but they're literally looking at every single thing about your business, between the bank statements, the tax returns, and everything in between. They're looking specifically to make sure that you're getting all that stuff done. So what's good about that is they're doing a thorough background check. They want to make sure that you look straight. So when it comes back and you get your first approval, you know you've been doing the right things by your business. Go back. I'm sorry. There are plenty of options available, of course, for financing. You can always go to your bank. Specifically if you are looking to get an SBA loan. Most people who are trying to get the SBA loan have to really, 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 really be on point. Otherwise, you may not get approved. But oftentimes your bank may just offer you financing just based on, their own products that they have there. So be careful, because remember, if you don't know if it's a true business credit product, they may be running your credit each time. And so now you're ruining your personal credit just to get business credit. So ask a lot of questions and make sure that it's a no personal guarantee, meaning you're not leveraging or using your actual social security number to get it, and that is only for your business. Now, alternative lending, there were some of the other things that we talked about. So asset-based lending, the merchant cash advances, 401k loans, things like that. So there's other alternatives out there for you. And so seek those as well. They're way easier to get than traditional financing. You can get approved right away, as well as get the money to you right away, much quicker to qualify, so to speak, as well as being able to get the money in your account. Much more favorable terms, and mainly is based on credit collateral or cash flow. So how much money you have coming in. It may be based off of your credit, business or personal, or it may be based off of your assets. So that's the collateral. When you're looking to finance your business based on collateral, you have to be mindful of these things. So there's a lot. So you can get collateral-based financing based on your 401k and stocks, your inventory that you may have, if you have a store, equipment, real estate, a book of business if you're an insurance agent, car lot inventory, purchase orders and accounts receivables, as well as commercial signage and graphic wraps. Cars used to be big, but I think they're steering away from vehicles. When we talked about the cash flow, merchant cash advance, this tells a little bit more in detail. You can usually get between 10 and 12% of your annual revenue as a loan to you. Even outside of that, you can get approved with bad personal credit, and you don't need any collateral, but you must show that you're making more than $10,000 a month to qualify. And so rates are really high. And again, you have to pay back between 6 and 18 months. So you don't have a lot of time. So what I encourage you, if you're listening, to make sure you're researching what you're considering to actually get, so that you know what is available to you. My final thoughts to you all are, it's a lot of money out there for you as a business owner to be able to get. What you may want to understand more is, do you really even need it? And so you're probably thinking, well, you have a financial service division, Jessica. Why are you not encouraging us to get more business loans? And mainly it's because I truly believe you only get it because you need it, not because you want it. And a lot of people want to get business loans because they feel it will help them get to what they need to get done quicker, and that's not always the case. Honestly, it's not always the case that you need the money, because if you hadn't really worked your business, then unfortunately, you're getting more money to spend more money because you don't have a plan either. And so that's not the best way to go about it. Of course, my company offers all kinds of financing. And if you want to discuss it, you can send us an email at info@firstclassfunding.net. First is 1ST. You can look us up on 1ST classfunding.net. .net to be able to get more information, to set up a consultation with us. And more importantly, you can always shoot us a text at 888-412-8362 and easily be able to contact us and see if we can help you with your situation. But my questions are always going to be, is your business registered? Do you have a business plan? And what's your credit and your finances like for your business? So those are the four things that typically I can get people approved on. And more importantly, those are the things that the lenders are going to ask me about you. And so if you have those things available, that's what's going to be best to help your situation. So we thank you very much for listening. We appreciate your time. And if you have any questions, feel free to go to our site, firstclassfunding.net, and we will take care of you. Thank you. Please enter your pass.